Hello everyone, Dividend Fire here. In today's video, I will do a wrap up of my year of 2023 as a dividend investor. In the breakdown of this video, I will talk about my retire early goal. I will do a breaking down smaller steps of my goal. I will also dive in my personal finance and talk about my salary, invest per month, current situation, so you can understand a little bit how in what my strategy is being built of. I will talk about my dividend portfolio performance till the end of 2023. I'll show each one of the stocks, how well those stocks are doing or how bad they're doing, and all the dividends I received in each of one of the stocks. And then after showing you guys about my dividend portfolio, then I will talk about my dividend strategy that I used in 2023. Talk about a few details of this strategy and you guys understand better what I'm doing. And then we're going to talk about how close I am from my goal. But just before we start, please, I highly recommend you to subscribe to the channel to follow all this journey where I seek to retire as early as possible. And this video is a wrap up of 2023. And soon I'll be releasing a video of my 2024 strategy. I'll get all that worked well in 2023, all my beliefs, all the learning I did, and I'll see what I can change in 2024 to make even better. So I highly recommend you subscribe if you like this type of content. Starting about my retire early goal. So I want to retire in 10 years. But now 2023 has passed. When you think now it's 9 years ahead. So 1 year has passed. It's 9 years now to complete the 10 years. And 10 years is a very aggressive goal. If your guys are longer on this dividend journey, you guys know that 10 years is not much. 10 years is a very aggressive goal if you want to retire with dividends. So considering that this is a very aggressive goal, I need a very aggressive approach as well, and that's what I'm bringing. That's why one of the reasons I also have this channel to share with you guys, so I can be accountable with what I do. So to achieve this goal, I've been breaking this goal in smaller steps, because to retire with dividends, you need quite a big dividend portfolio. You need a massive portfolio, and for who is building this portfolio from scratch, it can sometimes get a bit tiring, because you think, oh, I'm investing this amount of money every month and it'll take decades for me to retire, and you can get demotivated and just give up. So I don't want to get I want to keep myself motivated, and creating smaller goals help you to hit these milestones, and all the time you succeed one step further, you get more motivated to go for the next step. So I think victory is motivating. So I want to create small steps so I can win bit by bit, step by step, till I achieve the broader goal, that's retire with the dividends. So the first steps I created here, I created only steps till 100,000. So first step is a dividend portfolio of 10,000, then 25, then 50, and then 100,000. And beyond 100,000, I didn't create the goals yet. I can create when I get to there, just to have a more closer goal, wrap it up in smaller steps, so can feel a bit more feasible, feel a bit more reachable. So there is, we already hit here the dividend portfolio 10,000. Currently, if you consider by the last trading day of 2023, my dividend portfolio total is $24,000, 388. So this make me very close of the 25,000 dividend portfolio goal. I would like so much just to click here and update that, but didn't happen. Life is life, didn't happen. So I hope we can hit that by start of January. So we start 2024, hitting a new milestone will be very motivating, a great way to start the year. But yeah, not yet, but we are so close of this goal. I have also this dividend bar here, this gold bar here, where I see how close I am from the 100,000 goal. So we are over 24,000 here, so over 24% of this 100,000 goal. And when you talk about a strategy like that, nothing is possible if you don't mind your personal finance. So I would like to share with you guys here my personal finance as well. So my monthly salary is a bit above $3,600 per month. This is my salary after tax. So if you consider without the tax, would be a bit higher, but what comes to my account is after tax. So that's what matters for me. And YouTube earnings I don't have yet. My channel is not monetized, but one day will be. And when I start getting earnings from YouTube, and I will share here in the channel as well. Also because I want to use all these YouTube earnings to reinvest on my dividend portfolio. One of my goals in 2023 was to get a mortgage. And since I got my mortgage, I've been adding extra money to pay my mortgage earlier. I want to retire as early as possible, so I want to have less bill as possible. I know some people argue that yeah, I would do better if I would be investing this money instead of paying the mortgage earlier. If I have invested in the stock market in the long run, would generate more money. I understand this. I understand this argument, but I don't like having debt myself. And I feel that is training me. I feel that's training me more when I just paid off debt. So when I'm going to retire and I don't have a mortgage to pay, this will be so good for me. Like knowing that I don't have much expense will make it easier for me to retire. So I prefer have this sorted out, pay this debt, pay this mortgage, and have a full paid house. It would be amazing. So since I got my mortgage, I'm adding 500 at least to my extra money to pay my mortgage early. And to invest on dividend stocks, at least I was adding, my goal in 2023 was at least add $500 every single month. That's the theory. Soon we're going to discuss what we actually did in practice, but that was the theory. Add at least $500 every month. If I'm just adding the $500 every month, the percentage from my earnings invested in dividend stocks would be around 14%. Not too bad, not too bad. So here's the actual breakdown. In 2023, if I just follow my plan to invest at least 500, I would then invested on 2023 $6,000. If you consider 500 multiplied by 12, it would be 6,000. But you can see here in 2023, I did actually $10,000. I added to my dividend portfolio $10,000 from my earnings, not necessarily from my earnings, but I was able to add to my portfolio. I had some stocks in the past that wasn't dividend stocks that I sold then and add to my portfolio. Who's followed the channel longer probably saw videos talking about that. But so I was able to add in January 500, February 500, March 500. Until June, I was just adding 500 as was planned. In July and August, I wasn't able to add any money because I was preparing myself to start my mortgage. So I need to be very cautious, and then I wasn't adding any money. But since my mortgage got approved, I have the mortgage all sorted out. I had this all organized, so I was more confident to use some spare money after buying the house to invest a bit heavier. So to compensate also for July and August, in September I added 2,000, October another 2,000, November another 2,000, and December I added 1,000. So you can see I went heavier after I bought the house because I have a better structure, and I know how far I could go. So yeah, at least 500 per month. That was goal of 2023. But in 2024, I will challenge myself to go bigger on this number. So subscribe to the channel so you can see how will be our progress in 2024, okay? And it will motivate me as well. So please like the video if you like the video so far. Now let's discuss about the performance of my dividend portfolio. So at the moment I have nine stocks, nine stocks, not all stocks. I have also REITs, but I'll say stocks just to summarize. Yeah, like if ever different type of investment, being saying different things, get confused. So just let's make it easier. Stocks. I have nine stocks. So far since the start of this portfolio, my portfolio is only value is up 14% until the end of 2023. And when you consider dividends, it's over 17% when you consider dividends. So this would be the total return over 17%. And you see here this 575 is all the dividends I received, which is $575, but on 2023 alone was a bit lower than that. So here's is a overall portfolio. The most of these shares I bought when in 2023 on this dividend portfolio, but there was shares such as JPMorgan, Microsoft, and Apple that I had then since 2022. So there's some dividends from those stocks coming from previous years as well. So you'll be aware that that's why this number got bigger than the dividends received in 2023 alone. But so far, JPMorgan, I'm up 23% on JPMorgan. When you consider the dividends, I'm up 28%. On Microsoft, I'm up 40%. When you consider dividends, 42%. Apple, I'm up 40%. When you consider dividends, I'm up 41%. MPW, I'm down 38%. But when you consider the dividends, I'm down 33%. Is the only stocks I'm down is actually MPW. Verizon, I'm up above 1%, but consider the dividends, I'm up 5%. ABR, my dividend juggernaut, is up 28%, but when you consider dividends, I'm up 31%. US Bank, ABR is very heavy when they pay dividends. So the last stocks of ABR, the last shares of ABR that I had in my portfolio, they didn't pay me dividend yet. They will pay me in the next quarter. So my total return when you consider the dividends will go way higher. US Bank up 30%. When you consider dividends, 33%. Crown Castle 15%. Consider dividends, 17%. And Realty Income up 12%. When consider the dividends, 13%. So you can see my dividend portfolio is doing really well here, and I'm very happy with that. So you can see here my positions. You can see better the weight of my positions here. Clear, you can see that Realty Income is my highest position. ABR is quite high as well. I know the ABR is a mortgage REIT, is not the most stable stocks, but I will explain you further a bit better my dividend strategy so you understand why I'm doing things the way I'm doing. And on this graph here, you can see better that the Realty Income at this moment is 35% of my dividend portfolio, which is the largest position. And after that comes ABR with 20%. And after ABR, I think is Crown Castle. No, it's actually US Bank, 10%. And right behind Crown Castle, and the other one's a bit closer. Now that I showed all my stocks, all my dividend portfolio, you can understand better my dividend strategy. So my dividend strategy, I use as cutoff rule that they need to be paying me at least 5% of dividend yield. When you see that JPMorgan, Microsoft, and Apple, they won't pay me at least 5%, but it's still my portfolio. It's because I bought them before I started this dividend strategy. I started this dividend strategy in 2023, and I had then those 3 shares before that, so that's why. But I still decided, because of the high quality, I still decided to just keep them there in my portfolio I'm sure they will return me great results in the long run because they are amazing stocks. So I just left them there, but I don't intend to add any more money on them. And from MPW and downwards here was all following my dividend strategy of pay me at least 5%. And not only 5% of dividend yield as a cutoff, because I'm not just invested in on blindly only by the dividend yield, but also because those stocks, they are very good stocks that have been performing really well throughout the time. MPW, they had, since I bought them, they down a lot. They cut the dividend. So, but when I first invested in MPW, the MPW had a track record of 10 years increase their dividend, and they are doing a great job with shareholders so far. So that's why I invested. Was falling like a rock, because the high interest environment was very tough in all REITs, but especially in MPW, also because their tenants, their clients are hospitals that suffered a lot on the pandemic, and now they're struggling to pay back. So MPW stock is struggling a lot. It's a bit a riskier bet. It's a riskier bet, but the market is undervaluing so much MPW that I see opportunity there, and that's why I buy MPW. Might be not the best stock in the market, but is for the price that's been trading now, for me is a good opportunity, and I believe that will reflect well on the long run. So that's why I still sticking with MPW. The other ones, don't need to explain much. They are doing well in 2023. So so far they're doing well. But you can see Crown Castle and Realty Income, for example, they are up over 10%. And just about the 2023, it's a short time to be that up a quite nice bit. And this because they were being priced very undervalued. The market is valuing then all the REITs because they're high interest rate, and the REITs usually have a lot of leverage. They borrow a lot of money, so they likely to struggle on the high interest environment. But I know that those two, they are great quality, and they more likely to keep it return to shareholders, increase their dividends in the long run. So I stick with there. Then when most of the market wasn't believing on them, and this is paying off well so far. Same thing, U.S. Bank. Banks was struggling. Small banks started breaking, and investors put all the banks in the same basket. But I didn't believe that U.S. Bank would have been the same basket as bad banks, since they are the 50th largest bank in U.S. when you consider the assets under management. And they are very high quality. If you look at their financials, you will be able to see that as well. So, and they being, when the market realized that they were overreacting on that, now US Bank is up a lot. I mean, up 30%. I just wish I had bought more because it's doing amazing, and I believe it will do way well in the long run. Same or ABR, especially for being a mortgage REIT. Mortgage REITs, usually they are considered very risky. They very common on this sector. They're cutting dividends, but ABR is being exception so far. They are 10 years without cutting dividends. In fact, they are 10 years raising their dividends in a good pace as well. For example, it's such a high yielder. And the current value is up around 11%, but for my price, my unit cost is over 14%. And with such a high yielder, they still increase the dividends quite a bit. Like the last dividend rate was 5%, but such a high yielder in raising the dividends by 5% is quite good. So you can see my strategy basically is for cutoff. The stock need to be at least 5% yield, but it need to be a very reliable stock with a great tracking record, paying good dividends for decades, and good financials and a good expectation for the future. And I like to get them when the market is undervalued then, and I see the stocks that has value, and I know that they're more likely to give me great returns on the long run. And you see here is my diversification is not great, and I admit that. I would like to have way more diversification than that, because I don't believe that, at least in my opinion, nine stocks only in a portfolio is too low. I tend to add more stocks in my portfolio, but I tend to do that as far as I see opportunities in the market. For example, U.S. bank, REITs, when the interest rates go comes down, they probably will go back to their normal values, to their intrinsic values, and won't be as a bargain as it's been since I'm buying. Well, when we get to that, the markets are cyclicals. We'll have another stocks that will be very undervalued by the market, and when I see there are great opportunity, I'll be taking advantage of that. And through the time, my dividend portfolio will be increasing naturally in positions as I continue to apply this my strategy. So that's the way I believe. In the long run, I believe I will have many stocks in my portfolio, and it'll be sort of my own ETF. That's the way I think. That's my strategy to build my portfolio in the long run. Saying that, I want to show you how far and how close I am from my dividend goal. I want to do estimation here how much my portfolio will be paying in 10 years, considering my current dividend portfolio. But just before doing this estimation, I want to quickly here show how much dividend I've been paid on 2023 alone. So January $8, February only $2.40, March just above $5, April, here I start my dividend strategy properly. So you see from April on, you see the whole difference. April over $26, May $49, June $13, July over $64, August over $67, September $22, October over $76, November, my record, my best month so far, November 2023 is the month that paid me the most of dividends. I rounded up $86, and then December $74. Per quarter, $16 in Q1, Q2 $89, Q3 $155, Q4 $236. So you can see the difference that sticking to the strategy makes. Discipline is the main thing, I would say. Discipline is the main thing. I did a great results in 2023, and I'm very confident that I'll do great results in 10 years. If I'll be able to retire on 10 years, not sure, but I'll try the best I can. And I'm sure even if I don't retire in 10 years, I'll be with a really nice dividend portfolio, pay me really nice passive income, even if I'm just sleeping. That's what I believe, and that's what I want to still working hard on that. So overall, I got paid in 2023 on dividends $498. So that's all the payment and dividends I got on 2023, and I'm really happy with this number. Now, to finalize the video, I'm using this Tracker Dividends website here. They have a way so you can put your dividend portfolio and do estimation how much your portfolio value on the future. And to do this calculation, they get the 5-year dividend growth rate of your portfolio and also the dividend yield of the portfolio. So it's quite handy. But remember, it's just estimation based on the past performance. So the future is uncertain. So have this in mind, but it's interesting for us just to have a rough idea what is possible for the future. So consider that in 2023 my goal was to add at least $500 a month. So let's believe that I continue adding at least $500 a month and reinvesting the dividends in my portfolio. With that, I probably will reach around $13,000. After 10 years, I'll be receiving $13,000 per year in dividends. It's still not enough to retire. It's not enough for me to retire. $13,000 a year is too low for retire. So which options I have to increase this number? So to increase the number, either I need more time to give the compound effect a bit more chance to work in my favor. Let's say that I put it 20 years. With 20 years, from 13,000 go up to 76,000. Then I could retire. I'll be really happy retiring with this amount in 10 years. But I want to retire in 10 years. So if I want to retire in 10 years, we need to consider that 13,000, we're speaking about that now, will be different 10 years. We have inflation in our back. But since my dividend stocks, they are more likely to raise their dividends every year, I think I'll do fine, keep up with inflation. But okay, 13,000 will be not enough. So if I'm not willing to wait more years, I will have to add way more money to my portfolio. I will have to add monthly more than 500 if I want to retire that early. And that's what I'm trying to do, and I highly recommend you to subscribe to the channel to follow all this journey, and I will share with you guys what is my strategy 2024, how I can improve in 2024 to make this goal a bit more achievable. So see you guys next video. Bye bye.